Welcome to TheoTrade. This is Don Kaufman. It is March 21st, 2018. You are watching the Theo Night video. Let's kick it off with a little bit about, well, the Fed. This was an FOMC kind of a day, what I termed the Fed 2.0. Well, they hiked a quarter point. But come on, everybody was expecting them to hike a quarter point. Now, what a lot of people were not anticipating is some of the hawkish statements. Now, I talked about that specifically in this weekend's video, that we didn't really know what Jerome Powell was going to be and what he is. We had anticipated, though, more hawkish statements. For those of you unaware what that hawkish statement really means, it simply means that gradual path of like quarter point increases. They may bump that up. They may say things like, listen, the economy is, it's getting a little heated up out there. Let's move those interest rates a little faster than you had anticipated. And that's precisely what he came out and did. And I got to tell you, look at the marketplace today. So what happened early this morning? Again, right here is the cash open. A whole lot of nothing. We rallied up. We faded a little bit. And here comes the Fed. And again, that Fed, the announcement was right here. We spiked all the way to 27.44. But as traders started to read some of the initial press release, some of the comments, and then they kicked off an actual press conference with Jerome Powell right there at about 11:30 Pacific time. That's when the volatility started getting a little bit crazy. Now, I just want to quantify some of this move for a moment because, in 2017, there were, periods of time for like a week, literally a week would go by. We didn't see this kind of action in the market. Now, I know it doesn't look like that much on a chart, but you have to recognize, here's a marketplace and it's moving from in the neighborhood of about 2740 all the way down, just missing 2710. You're looking at like a 30-point move. Again, that's a 30-point slide in the S&P futures in what amount of time? Okay, you're looking, 30 minutes. 30 minutes for a 30-point slide. This is the big leagues in here. And then we bounced, got half of it back, faded, gave it all back and bounced yet again. So if you're looking for volatility and you like to trade on an intraday basis, let me tell you, it really doesn't get that much better, on an intraday basis. Now, granted, the S&P futures today, they only finished down 5. Okay, let's move on from the S&Ps for just a moment. And by the way, we're going to have some trades that we had on. We're going to discuss. We're also going to look at some new trades. But bear with me for a moment because I think this is important for the entire marketplace. Now, some of you are comfortable looking at the Nasdaq futures. I don't know. Maybe you're more comfortable looking at the Qs. Okay. So in this particular circumstance, I'll bring up the Qs, which represents, of course, the Nasdaq. So I want to zoom in and I want to go to a year-to-date percentage because I got to show you something that I think is being missed by so many people. The Nasdaq marketplace right now is under some pretty severe duress. Okay. This is just from last week. This is when it hit its all-time high last week. Do you realize, and hopefully you do realize, that the Nasdaq has now slipped, okay, in the amount of a full 5%. Now, it would not surprise me in the least to see the Nasdaq bounce back up in the next day or two. Nevertheless, at this point in time, okay, primary trading idea, short bounces in this Nasdaq. Short the bounces in the Nasdaq. This is starting to look, again, substantially more, if you will, ugly than some of the previous moves that we have seen, okay? Where ultimately we sold off, bounced back up, sold off, bounced back to all-time highs. This sell-side activity is really starting to permeate into a number of the key products that really hold the NASDAQ 100 together. Now, sure, I could spend time talking about Facebook, but that's neither here nor there. So Facebook, but its slip really began, what? Okay, you're going back to Monday. And in fact, Facebook even bounced today, ending up $1. one of the things that people are not looking for and haven't really seen yet is Apple has also been at the forefront of this most recent slide to the downside. Again, here we have Apple that was up about 6%. Where is it right now? Massively unchanged on the year. So Apple is unchanged in the year. This is a 6% slide to the downside. All of these underlyings, what I term the monsters of tech, okay? And the monsters of tech specifically, that's a conglomerate symbol that I kind of created. It's a Facebook, plus Apple, plus Microsoft, plus Google, plus Amazon. The monsters of tech are throwing off wild intraday moves. This should make you extraordinarily nervous. Now, I'm bringing up Google. Has Google had a massive slide? Well, actually, yes. It's off 8% in that exact same time frame. Take a look. All right. Here's Google. It's up just about 10% on the year. As of today, it's up about 2% on the year. This is, again, 10% slide. As of yesterday, it was even down to a 10% slide. These are some big moves that we're starting to see. Even Amazon, which, the argument is, oh, look at yesterday. Okay. Look at some of the moves that Amazon's starting to throw off at an intraday basis. Things are getting sketchy out there, and there's no other way to really describe it. When I say sketchy, okay, this can be to the long side, to the downside. Every nuance of liquidity seems to be concentrating to a handful of underlyings, right? And what that effectively means, you start looking at some of the volume in these products. All right, so some 4.7 million, shares traded in here. Okay, you can take a look, different Google, and it's Google L and Google, about a similar volume there. If you take a look at Facebook, there's over 100 million shares that have traded in there. Okay, take a look at Apple, almost 36 million shares trade. When I say a concentration of liquidity, when you start looking at products that are not in, for example, these monsters of tech, it's like they don't even exist right now. Now, Intel, which is also a really considerable market cap, but Intel, it's a $51 product. This thing only does 23 million shares. Again, that's not that much in terms of notional value. But a lot of the products, okay, that are even decent sized market caps that are not in that monsters of tech, if they're not driving, okay, the Nasdaq, if they're not absolutely monumental in terms of their market cap, nobody seems to be trading them. And that is a dangerous marketplace. Now, let's switch gears a little bit. So we've looked at some of the dangers in the marketplace, but one thing I want to kind of keep you kind of abridged of, halfway through the week here is in the SPX. So why do I look at the SPX? Because the SPX gives us a pretty good feel of what we're expecting in terms of risk for the remainder of this week. Right now, we're poised at about a 17.5 vol, but we're still expecting, okay, just over a $32, okay, expected move. And that means, yeah, a lot more volatility. I mean, you think about this, we're through Wednesday already. We only got Thursday, we got Friday. We're still expecting $32 of movement, all right? So, keep your helmet on out there. Markets are still going to be rocking. Even if we do see that bounce in the Nasdaq, again, I'm looking for selling into products that are bouncing, which I'm going to come into here in just a moment. Now, to kind of further the SPX, one interesting point that I want to make with the SPX, if you take a look, okay, again, there's a $33 expected move still in play. However, the weekly expected move, and this was going back to, if you remember on the Saturday video, there was a $45 move that was being implied to the marketplace. We are and were today just skimming just north of this expected move. And you can see we closed mildly above the expected move. Okay, I mean, this is almost like a rounding error. It's a $2,700 product. The expected move sits right on 27.06. We actually crested down to 27.09, stopped on a dime, bounced off of it, ended up down there. I would not be surprised to see us cross through, okay, the bottom side of this expected move as, Thursday again and Friday progressed. Now, I will also throw this one number out again, okay? if the market is to break down, as I said, I anticipate that the Nasdaq will have a bounce. Come on, it's just sold off 5% straight down. I anticipate the Nasdaq could bounce. Okay? In the event that it does not, the S&Ps are likely to trade all the way down to 2682. Quite frankly, I don't have a target on the back of the Nasdaq futures. I've got a target on the back of the S&Ps, and that number again is 2682. The Nasdaq, though, I have to tell you, the moves that you're seeing in there, 100, 200 point swings like we saw on Monday, people, that is far from over. Now, let's get to some opportunities, okay? And a few opportunities we discussed. On Monday, one of the things that I talked about, get bullish in energy. Hopefully, some of you guys took that and ran with it, because the move that we saw in energy today was quite spectacular. Now, you could have been trading in the XLE. I actually selected to trade inside of ExxonMobil. I went out, sold puts and sold put spreads inside of ExxonMobil. A nice bounce today of, again, just about 1.4%. Some of you may have carried positions inside of XLE. Doesn't necessarily mean that this move is over. However, given the opportunity to cover some of those positions, if you get a little bit more follow through in energy to the upside, cover them. That means close those positions, because some of the move that we're getting in energy, right, has a lot to do, okay, first of all, with, the dollar selling off. Oil had a relatively good day because the dollar got absolutely, whacked in here. But energy also has a bit to do with the fact that the Saudi prince is still kind of parading around the U.S. and cutting deals. Everybody likes to see it. Energy is getting bid up in the midst of the Saudi prince. So that's a little bit on the side, but given the opportunity to cover something profitable, okay, listen, you don't get 2 and 3% moves every day, or you don't get 2 and 3% moves pretty much the day after we mentioned it. So don't look that gift horse in the mouth. With that, I want to show you a few other opportunities and specific trades that I took. I talked about this also earlier in the week. If Boeing bounced, I would short into that bounce, and I've now done that. So Boeing and me have gone a long way back and forth, all right? So, in a bunch of different Boeing trades that I've placed over time, I continue to build positions inside of Boeing. And all I did is, here we are 30 days out in time. Now I'll take you back over to the chart, because you got to make sure that earnings are not in this window. Earnings are all the way out here, April 25th. I went ahead, and by the way, I was just probing markets today. I'm going to try to get some more contract size on tomorrow. But here is a $5 wide spread that I created. And I was able to fill that $5 wide spread, okay, for under $2.20. Right in this neighborhood is relatively, a decent price for a $5 wide spread. It's again, you got to pay under $2.50 for this $5 wide spread. I was able to fill it right in this neighborhood again of 220, 225, and I was probing markets, right towards the end of the trading day. Again, this is a bearish position, okay? And with this bearish position, I'm going to continue to add a little bit more contract size as I get the opportunity. It's very important. You do not want to step into the longer duration expiration, because there'll be an earnings announcement within there. One other opportunity, and I'll discuss this a bit more kind of in the chat room in the morning, happens to deal with some of the financials. Now, what do I see inside of the financials? If you start to look at the financials, look at Bank of America, and JP Morgan, and Citi, and Wells Fargo, and Morgan Stanley. Morgan Stanley has just outperformed the pack, bar none. And I've actually elected to take a short position inside of Morgan Stanley. So, early in the week, I'm bullish. Yeah, Don, imagine that. Don is actually bullish. Early in the week, I'm bullish in energy, but now I'm actually stepping up and shorting into the financials. And why am I shorting into Morgan Stanley? Well, quite simply, it's up 9%. It's outperforming all the other financials, and if the financials are going to fall, Morgan Stanley's like to follow suit. So a little bit of a bearish position here in Morgan Stanley, a little bit of a bearish position in Boeing, bullish over in energy. Although energy, I'll tell you what, with the pop today, I'm looking to cover those positions. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.